Believe it or not, it's the 7-year anniversary of the bull market. Jim Cramer's here. Jim, I don't know, it still doesn't really feel like it's been a great bull market for a lot of people.
No, it doesn't. But I remember when the late, great Mark Haynes, who was a good friend who put me on TV first, did say, listen, it was a crescendo sell-off, meaning that everybody wanted to sell sold. And one of the reasons why I think that it doesn't resonate all that much is because the number one stock since the bottom is General Growth. I mean, that's a REIT, so it is kind of like, who cares? Regeneron is the next. Regeneron had the better mousetrap. They had a drug where you literally only have to inject your eye 12 times rather than 52 times. Regeneron's a stock that I'm very proud of because I discovered it. It was at $5. It was my first guess on Mad Money. It was because Len Schleifer, who runs the company, happened to be my head writer's neighbor, Cliff Mason, who's of course also my nephew. But yes, I agree. It doesn't feel like it, and frankly that's because the last year has been so depressing. And I see it when we talk about it with action alerts. We talk about it with real money being both ways, by the way, short and long, and Doug Cass being really strong on the short and Real Money Pro. And it just kind of feels like, well, you know what, it's come and gone, and I, especially since QE ended. And I would urge people to look at individual sectors. We have these rolling bear markets. I mean, look, we had a rolling bear market, and then if you bought the oil stocks at Marathon, if you bought Marathon at 6, you just almost got a double. I think you have to be opportunistic and look at where the bear markets are. And when the bear markets are really in full force on a Pepsi or a Clorox like the other day, Kimberly, you buy, and then you wait for the money to flow back in. The reason why all this is happening is because there's no money going into stocks. It's just stock money going zero-sum from one group to the other. There's money going into ETFs, and there's money going into bond funds. But it has to do with a lack of money going into the stock market. And that's really what's causing you to feel like there's nothing cooking.
It's hard to imagine what's going to bring all that money back into stocks. To your point, things kind of roll. These sectors roll, but what about...
I mean, there's no IPOs that are hot, and we had some M&A, but M&A seems hard for people to understand. What we have to do is resurrect the notion that if you could have picked a General Growth or a Netflix or a CBS, you could have made big money. That's one of the reasons why I do what I do, why I started TheStreet, why I do Mad Money, which is that, you know what? Look, there are opportunities everywhere. They knock constantly. Campbell Soup, CEO comes in, decides they're going to make it a more natural and organic. Stock goes up 20 straight points. Hormel, more natural and organic. Stock goes up 30 straight points. I mean, there are things that happen. Smucker's decides to grow. But I'm picking food stocks because you see them every day in the store. But there's things right in front of your face where you can buy, but a lot of the professoriate, the academics, have said you can't do it yourself. I think that's an insult. I think a lot of the people who watch this should have Mad Money for individual stocks, and then ETFs. Do them both. They can coexist. That's been my message.
All right, and you'll navigate us through the next 7 years, I'm sure. Jim Cramer.
It's been 20 years for TheStreet. I've been on TV for 20 years. I never give up hope that people recognize that ETFs and individual stocks can coexist in the same portfolio.
Jim Cramer, as always, thank you. I'm Rhonda Schaffler for TheStreet.